Hello, Andrew here with an update on investment markets for May 2020, and it was nice to see over the last month we saw our local market and most international markets finish the month in the positive. Our local market up 3.18%, the US market up 5.43%, and since the trough, really when the bite of coronavirus grappled world investment markets, our local market is up 19.85% since the 23rd of March. So there you go, in a black swan event, we've started to see a fairly strong recovery, but still got a long way to go from where we were back on the 20th of February when we hit an all-time peak. Now, I wanted to talk a bit today about the various investment portfolios I have my clients exposed to. So if you are with Republic, you would have seen during the month they sold some of the gold holdings in those portfolios and purchased more of the Australian equities holdings. If you are with Implemented Portfolios, you've seen that they've continued to buy more equity exposure, growth exposure, property securities in their portfolios. And if you're with Dimensional on Hub24, you won't see any trading, but Dimensional is trading internally within those funds. And again, the briefings that I've received from Dimensional is saying that they, again, continue to buy more equities, more growth assets in those portfolios. So the key theme here across all the portfolios is they are slowly being adjusted to a slightly more growth orientated allocation, meaning that as markets recover, you'll benefit from that recovery. And it was reassuring to see. I found an article in the Australian Financial Review which sort of verified and backs up what I've been saying to everyone about, slowly move into the investment markets, take your cash, invest it slowly, gradually, a monthly installment plan, a regular savings plan. They're the common things I've been speaking with everyone about. And I think the reason why we do that is more from a psychological or emotional perspective, that we don't do any knee-jerk reactions from throwing too much cash into an investment market at once and then suffer from a lot of volatility. So that's just really this month, nothing too new, but just saying let's stick to our strategy, and it's nice to have some verification that that's the right thing what we're doing. I think it's interesting too, CoreLogic gave some data on the housing market. Look, what we're seeing at the moment is that housing values are remaining stable, but it's very clear that listing activity for both rentals and sales has dropped substantially by the tune, for sales it's down almost 40% compared to the same time last year. So that comes with no surprise. And I think culturally Australians in an economic downturn will hold on to property and not try to sell it in a panic event. So hopefully there's some updates that you'll find interesting for this month. And as always, if you've got any questions, just feel free to pick up the phone and give me a call, or click on the link below and we can schedule a time to chat. Cheers.